Welcome back. This video, we're going to be covering last week's trading and we're going to go over the lessons that I learned, lessons that you guys can learn and implement to improve your own trading. We're going to cover how I made 1% on my account, how I got a free 100K account. So let's get right into it. Okay, boys. So a couple of things to cover from last week, and I've got my journal right here in front of me so I can tell you exactly what happened, right? Because I don't want to be missing anything that's important. So essentially, last week was a pretty okay week. We finished the week up 1.2% for the week, which is we're up about 4% on the account now over the past month, which it's not fantastic and we could be up higher, but I'll be honest, 4% in a month, I'm very pleased with that. We had three profitable weeks and we had a losing week, and then last week was a profitable week. We didn't recover the losses from the week before, but it was still a profitable week. And had we done certain things that I'll get into later in the video, we should have been up profitable compared to the week prior, but obviously I made a couple of mistakes, as we do, because we're learning, we're improving, and I'm still very happy that we finished the week strong and we finished the week up 1.2% on the account. Not only that, but I managed to get myself a free 100K account with Funding Traders. Um, Essentially, if you don't know already, I run an Instagram account with over 100K, and they offered to partner with me, and so I reviewed their firm and I really liked it. They've got a lot of good rules that I always preach about. We want to become professional traders, and this firm has the rules in place to stop me from gambling. And I just really like the firm, so I decided that I was going to partner up with them. I've been offered many opportunities, um, but yeah, these guys gave me a 300K account, and I took the trade. They took a trade on that account, and that's up 2% as well. So last week was a good week. So essentially, now I'm running another 100K account in the background, which is really nice. I'm going to try and run that up as well and get 110K in funding. But so far, we're at 4% on the 10K account, and this 100K account, we're up 2%. So covering last Monday, Monday was it was a pretty shitty day. Like, I didn't take any trades. It was just a slow day. And I avoided taking a really suboptimal trade, right? Because I was looking at the market. Essentially, price was consolidating quite aggressively, and there was a big fair value gap below price, and we had a draw on liquidity above price, right? And so I saw my strategy play out, but I was actually expecting price to run into that fair value gap, have manipulation, and then distribute into that liquidity above, right? And when I saw my strategy playing out, I was like, right, this is really not massively aligned with the higher time frame context here. And so I sat on my hands. I said, I'm not going to take it. It's not a good enough trade to take. And you know, good thing that I didn't, because that was a losing trade. Whether I'd even consider it a trade at this point is something I've got to think about, because I wouldn't take that trade ever if I saw it. I just wouldn't take it because I expected price to run lower before it went higher, rather than just taking the long immediately, right? But price did eventually manipulate into that fair value gap and then distribute higher, exactly as I was anticipating. Unfortunately, there was no trade in that movement for me to take, but I was very pleased that I didn't take the shitty trade, and I was right about my bias, although I didn't make any money. So remember, guys, the lesson that you can take from that is obviously just make sure you're always aligning with your higher time frame context. Don't get FOMO when you see your setup, right? Because you might see your setup, but it might not align with the context on the higher time frame, and so it's not good enough to enter onto that trade. That's very important. It's something that I've been implementing in my trading recently. That has just really improved the quality of my setups. So on Tuesday, unfortunately, we missed a really solid 1 to 2.5 trade. And there's a couple of reasons why I ended up missing this trade, right? I'm trying to figure out why I changed my mind about this trade, because I got on the charts and I looked and I thought, right, this is exactly what I anticipate to happen. I expect we run up above the highs here, and then we're going to distribute lower. And that's exactly what I was anticipating to happen. as I first looked on the charts in the morning. And then later, when price did that and it offered an opportunity for a trade, I didn't take it because I hesitated. I just didn't take it. And that ended up being a winner and we missed it. And that absolutely sucked, right? And I think the reasons for me not taking that trade were a couple of things, right? I've been a bit out of the routine, right? I think I laid in bed a little bit extra that morning. I went and had like maybe a sugary drink before my session. Uh, and when I was on the charts, I was over analyzing the charts, right? Typically, the best thing to do is to look at the charts, pick your favorite pairs. What do you expect to happen? Set alerts, right? And then get on with some other tasks. That's just like important thing to do. That way, you're not staring at the charts and burning yourself out too much. And by the time the alerts get hit, you can come on the charts. You're super sharp. You're super fresh. You can make optimal decisions, right? Now, the thing is, for that day, I remember I was I was on and off the charts like every 5 minutes. I was checking the charts. Didn't just let my alerts get hit. I was looking at crypto. I was looking at YouTube. I was looking at Twitter. My brain was all over the place, right? I was looking at Instagram Reels, and so I was heavily distracted during my session. And I overanalyzed the charts, kept looking back at them, waiting for something to happen. And I decided, like, oh, you know what, I don't trust this trade. Maybe it's going to go higher. And so basically, I clouded my decision making, and that caused me to basically lose trust in that initial setup that I had when my brain was at its clearest point. And by the time that trade came around, I just had lost all composure. Uh, and I just was like, I'm not taking this trade. I don't want to take it, even though it was a really good setup. And I wish I had taken it. But obviously, the lessons I've learned are just you really need to stay in your routine. Don't get too distracted. Set alerts and come back to price once your alerts have been hit. And don't just be staring at the charts the entire time because you will burn yourself out by doing that, by looking at the charts too much, by just constantly analyzing, looking at every single move. You're going to burn yourself out. It's something that happens to me and something that I've realized. So the best thing that you can do is obviously just set your alerts, and when they are hit, then come back on the charts and look for your opportunity, because it's all about obviously optimizing your decision making. So yeah, just make sure you're not overcrowding your brain during your trading session. You need to stay as focused as possible. Only do one or two other things while you're waiting for your alerts to be hit, and try and remain super, super focused. Then coming into Wednesday, we had a loss and a winning trade. To be honest with you, the loss was a suboptimal trade. I think based on that missing that winning trade on Tuesday, I came into the markets and I think there was obviously a little bit of FOMO, or a little bit of, wanting to make some profit given I had missed out on some the previous day. And this trade followed my strategy, but it was like suboptimal. Like it's not one that should really have been taken. Typically, I like to see price being supported by PD arrays and all of that, but it was simply just a liquidity sweep, and it just wasn't good enough. It was really, really sloppy, to be honest with you. And looking back, my bias was very strong for bullishness, but it was such a sloppy entry. Price was kind of all over the place. It wasn't really being supported by any price action either, and it wasn't a good enough trade to take in hindsight. Um, and so that one ended up losing. That was a -1% loss, which is completely fine. It is what it is. Like, you're going to take losers, but I obviously could have taken a better trade. And I've got to remind myself, something you guys can learn is obviously the trade has to be good enough to accept as a loss, right? And just because you missed a previous trade, or you lost the previous trade, or whatever it is, never decrease the quality of your setups. Those are two important lessons that I have written on a notepad right there in front of me, so I can see that when I'm trading. Never decrease the quality of your setup, and each trade must be good enough to lose. You look at it afterwards and be like, I would have taken that any day, even if it loses. And this trade was neither of those. It was the quality of the setup was low, and I don't think it's good enough to accept as a loss. but it is what it is. I made the mistake. I'm learning from it. I journaled about it, and I've got some things in front of me to remind me not to do something like that again. But then I was also, I continued to look at the market. I thought I was not revenge trading. I was not feeling any type of way at the time. I thought it was just a loss. Completely fine. Shrugged it off. Continued to look at the market, and we found a strong trade on USD CAD, 1 to 2.7 risk to reward. And so I placed that trade on my 10K account. I also placed it on the 100K free account that I got given. And essentially, price tapped in and just ran straight to take profit. But a couple of things I did during this trade that maybe weren't the best, but I don't look at them and think that was a bad decision. But it wasn't completely my following my plan, right? Because price got to 2.2 R, and I really thought price is likely to push like quite a lot higher here to maybe 3.5 R. My target was actually 2.7 R. This might be getting a bit confusing. But as price got close to that 2.7 R, I essentially locked in price at 2.2 R. I moved my stop loss so that price would secure 2.2 R regardless. And then I moved my take profit all the way up to 3.5 R, thinking, right, if it loses, it's not a loss. We make 2.2%. Or if it does continue to run, we're going to make an extra 1.3%, which I thought price is already running in my direction. This is probably like, I thought it was a really good idea to just stretch out the profits of this trade, right? It makes sense to do that when it's on your side. I mean, I read a book called The Best Loser Wins, and that's one of the biggest points he says. He says, cut trades when they're moving against you, and ride the trades when they're going in your direction. And I found myself thinking, I was thinking from the opposite of an abundance perspective. I was thinking, shit, like this trade might run against me, this trade might run against me. And then I said to myself, hold on a minute, this trade might run for me, like it might run with me. So I literally just switched my thinking in that instant and thought, this trade is already going in my direction. It could continue to run much higher, rather than thinking from that lacking perspective of, well, price might turn against me. So I was like, okay, I'm going to try and stretch this take profit here. Anyway, what happened was price literally just tapped me out at 2.2 R, and then it literally ran to that 3.5 R. So I was correct about where it was going to go. Unfortunately, I only locked in 2.2% on that trade. It should have been 2.7%. It could have been 3.5%, but that's just something I'm going to have to work on, trying to take as much profit as I can while managing risk, because that makes sense. It just makes sense to me to do that. And that trade also hit, take profit on both the 10K and the 100K account. And by then I was done for the week. I didn't want to take any more trades. I was happy that we were up 2.2% on the 100K, and we're up. Well, now we're back to up 4% on the 10K. I think at one point we were up 5%. Now we're up 4%. But, we're just going to take our time. There's no rush at all. We're a month into the challenge, and, things are going really well. I've been trading at my best, highest level that I've ever traded at the moment, and I'm going to continue to do so. I've been turning up every day and trying my best every day and just performing as best I can. And so, we're going to try and pass this challenge, not in any rush to do so. But this week, looking ahead of time, I'm going to take a backseat in the markets because we've got elections, we've got FOMC. It's going to be proper choppy, and it's going to be quite difficult unless there's a great opportunity to take a good trades. So, to conclude, the lessons that you guys can take away from this is obviously stick to your routine. Don't allow things to creep in, like looking at social media when you're supposed to be trading, or getting up late, or eating junk food. Don't overcrowd your brain during the session. Remain as locked in as possible to make the best decisions. Set alerts for your key levels rather than constantly checking the charts, because, like I said before, and I always talk about, you're probably going to drain your mental capital doing that. And just try and optimize for being in the flow state when you're on the charts, right? Nothing else should be in your brain when you're trading except just focusing on the charts and making the best decisions possible. So try and optimize for being in the flow state. That means, just eating the right food, getting the right amount of sleep, being fully rested, being awake on the charts, etc., etc. All these little things just improve your decision making. Because as a trader, essentially we're just decision makers and risk managers. So you got to optimize for both of those things. But that's it for last week. This week we're going to take it slow. We're going to see how it goes. And as always, guys, if you want to become a professional long-term trader and do this shit seriously and make the big, big bucks, and hit the subscribe button, guys. And if you want to join me on my journey to becoming a funded trader and making 10, 20, or 100K a month, then become one of the OGs. Subscribe while I'm under 1,000 subscribers. We're going to hit 100,000 subscribers, boys. I'm telling you now. So subscribe now if you want to become one of the OGs. You can join my Telegram in my bio as well. And you can follow me on all my social medias in my bio or in the description. So subscribe, like, and I'll see you in the next video. Hopefully you enjoyed that, boys. Peace.